All right, guys, so I'm actually going to be covering the homework over the past week, and I gotta say I'm really super impressed with some of the stock picks that you guys have made and requested. It's 5 stocks total. I'm going to be covering 4 of them. One stock that was brought up was Activision Blizzard, and I am going to do an entire stock analysis video on that in the future, okay? I think I'm a little bit heavy on video gaming right now anyways, but Activision Blizzard is one company I would want to spend an actual entire stock analysis video covering. So the 4 stocks we're going to cover in this video, guys, is WWE, LEG, MO, and WBA, okay? And then I'm also going to briefly mention the Lyft, Uber, and Robinhood IPO, my progress with that. And then I'm going to talk about a stop limit order on Robinhood. I had a subscriber request how to do a stop limit order on Robinhood. I'm going to cover that, and I'm also, real quick, I'm going to pull up the current holdings on MJ, okay? And I know that was asked about late last week, that there's a lot of times where you can find a lot of conflicting information on the internet, especially on a ETF or mutual fund, and how their positions change, and they can change almost daily. But I have the most up-to-date fund holdings on MJ, and so we're going to talk. I got inside of my broker, and it was just updated a couple days ago. So that is the things I'm going to handle in this video, guys. And I am ready to go over here to scene number 2. So the first stock right here, guys, WWE. I am loving this thing. I'm loving this thing for so many reasons. I want to thank whichever subscriber it was that requested I look at this stock, because now I just gonna have to go buy some the next time it dips a little bit. And this stock does not even give very many opportunities to dip. It has just run like crazy. Year to date, it's $30 stock in January, and now it's a $90 stock. Okay, so it's went up 200% year to date. Outstanding, you know, and a 1-year chart is even better. So back in October, it was running about $23, and now it's you'd have about a 300% return. Let's do a little fundamental breakdown. Okay, here's exactly where I want to start, right here at the top. $7.54 billion market cap. I feel like that is very, very undervalued. Okay, I feel like this is a $20 to $30 billion company where it stands now that just hasn't quite realized it yet. So ironically, this is the only stock in tonight's show that has a really bad PE ratio. It has 72 PE ratio and 150 trailing PE ratio. However, I'm going to touch on this a lot tonight, so this is the time to really pay attention, is that PE ratio is really high, but the 52-week change, it's a 305%, and I feel the market cap is very undervalued. So the PE ratio would kind of tell you that it's overvalued, but I think the demand is there. I think this company is very, very undervalued. There's a lot of things I like about this company for it to be an entertainment company. So one of them is right here. The profit, operating margins are good. Return on assets is good. Return on equity, 19%. I like all of that. This is what I really, really like about WWE, though, guys. $341 million of cash, $213 million of debt. That is amazing for a big, massive entertainment company. You hardly ever see that, and so this company is very protected on the downside as well. They pay about 0.5% of a dividend, so they pay you 48 cents a year for each share you own. So you're getting a little something, not a heck of a lot, but you are getting something. And right here, the quarterly earnings growth, 95%. And keep that number in your head as we move on to other stocks. That's very, that's why I want to buy this stock. Almost 100% earnings growth and a 31.2% quarterly revenue growth. I'm absolutely in love with WWE now. From everything I've analyzed, I'm probably going to take a position in them. I'll probably wait for a dip, like But then again, like I said, we can go back to the chart. It really doesn't have any dips. You could have got one that looks like right here, where back in July, it hit $81 to $85 and then it dipped down in the 70s again. So, you know, by the looks of this, we're peaked up again. We should have an opportunity to buy back into this stock. But I'm jumping in if I see 2 or 3% fall off this thing. I'm jumping in. I really like this stock. I think it's very bullish and it's something you're going to want in your portfolio. Like I said, my biggest thing is that I think the market cap is just very undervalued. I think this is a $20 to $30 billion company. Okay, we can take a look at tip ranks too, kind of see where their analysis is on them. So they're giving them about an average of a 95% price target, so we're already there. Has a strong buy overall rating, and this isn't quite up to date like I wish it was, but as you can see, they maintain pretty much a buy rating, 2 holds, and they have a $104 price target and a $100 price target. But I think you could put a much higher price target on it because I just think the market cap is just severely undervalued. Okay, now let's move on to the second stock, and that's Legget Platt. Okay, now Legget Platt, guys, this is a residential bedding and furniture company, and they also deal with automotive seating, industrial materials. Okay, and they're based out of Carthage, Missouri. I don't know quite a lot about Leg, so I'm going to look at this stock very objectively. The 1-year chart looks very flat. Okay, you had opportunities to buy, but the 1-year chart, if you'd have bought a year ago, you'd be holding a loss right now, and over a 5-year period, you'd be having a nice gain. Looks very steady and looks like a very good value stock. Okay, but on the other hand, not a lot of growth in 5 years. Okay, let's move on, give it kind of a fundamental breakdown. So, smaller company, $5.7 billion. Now, this is what I want to talk about in comparison to WWE. This company has a great PE ratio and a great trailing PE ratio. Okay, you jump right over here to the 52-week change, they're down almost 10%. So, the PE ratio is going to say it's going to tell you it's undervalued, but it's not seeing very much growth over a 52-week period. I can pretty much point you in the direction of why that is. I do like this 25% return on equity. I like that a lot. Okay, but right here is my opinion, is your problem. You're at an 11% quarterly revenue growth, but you're at a negative 3% quarterly earnings growth. That's not a bullish signal. You're getting a 3.4% dividend. That's probably the best part of owning this stock. The cash to debt ratio is fine. It's manageable. But this bothers me. Negative 3% quarterly earnings growth and 11%, positive 11% on your quarterly revenue growth. I'm probably going to pass on this one. I think if you want to invest into it, be my guest. However, I don't like a couple of their metrics, and I don't know enough about them to know the real storyline behind them. So me personally, I'm going to pass on this stock. Okay? Now, the next one is a tobacco and a smokeless tobacco company. That's Altria Group. Ticker symbol MO. I got the 5-year chart pulled up. It looks really good. Looks like it's actually pulled back quite a bit from its highs. On a 1-year chart, it almost looks very similar to the last company we were looking at. I did like some things about Altria Group. We'll get into that. But you're holding about a 4% loss in a year. So that's not good. Looks like they found some resistance. They found kind of a bottom here. Hopefully they found a bottom in about April and May. And they've been on a nice steady rise ever since. So this probably would be a pretty good dip buy, and that 3% dividend would be real nice to have in your portfolio. Oh wait, you know what? I don't even know what I think this company has about a 5% dividend. But huge company, big company, $113 billion market cap. And again, exact same situation as the last stock. Very good PE ratio, very good trailing PE ratio, and no growth in 52 weeks. Minus 3%. So we need to investigate a little further and find why metrically this stock is undervalued. However, we're not seeing any growth in a year's time. I love these margins. I really, really love. There's two things I love about this stock. All these margins: 54% profits, 51% on operating, 14% on assets, and almost 75% on equity. That is really good. However, I think something else is coming in and attacking its space and taking a lot of business from them because they're at a negative quarterly revenue growth and a negative quarterly earnings growth. So that bothers me. But 5.26% on a forward annual dividend yield. That is a dividend you want in your portfolio. And I'm going to pass. Okay, I have several stocks that pay a higher dividend than that. This is a tobacco and smokeless tobacco company. I'm going to pass on it, but I will call this stock a buy. I'm not going to put it in my portfolio, but I can definitely make a case that this stock can come back. And even if you're just dip buying and collecting that 5% dividend, then good job, more power to you. And the last one is a Dow Jones Industrial Average stock, and that's Walmart Boot Alliance. Okay, ticker symbol WBA. This stock over the past year has not really seen any growth. This is a very, very steady stock that's actually seeing some pretty big dips right now. You got to think that back in January, this was an $80 stock, and it got as low as in the 50s back in June. Got to dip down into the 50s again. So that's not good. I'd be upset if I bought up here in these highs and it dipped down real low like that. So let's go a little further. Now, Walmart Boot Alliance is on the Dow Jones Industrial Average, and I will even pull that up here in just a second. So again, same as the last three stocks, you've got pretty much the same story going on here. You have very good PE ratios and no growth in 52 weeks. So perhaps it isn't a good place to buy. Margins aren't the best. They're pretty solid, but they're not the best. A whole lot more bullish scenarios out there. Do I feel that this $72 billion market cap is undervalued? I do. I do think Walmart Boot Alliance is a buy, and I'm going to go as far as saying that pretty much any stock on the Dow Jones is going to be a buy, okay? Even the ones that get delisted are still usually really good stocks. Like I know AT&T got delisted a few years ago, and I would give AT&T a buy rating. Not my favorite telecom play, but I would give it a buy. You do have positive quarterly revenue growth, and you do have positive quarterly earnings growth, and you get a 2.41% dividend. So I give this stock my blessing. Just make sure you're buying in the dips if you want to own it. Okay. And that pretty much covers the four stocks. Let me pull up the Dow Jones Industrial Average too real quick. So this is something I wanted to talk about real quick, is that when you yourself are looking at a stock, try to figure out where it's listed at and what exchange it's listed on. Because these are all the companies on the Dow Jones Industrial Average, and I'll go through here and count how many of these I already own. Okay, I'll tell you how many individual stocks I own, and I bet I have almost all of these stocks in a mutual fund or an ETF somewhere. So Apple, Boeing, let's see, ExxonMobil, Intel, Johnson & Johnson, JP Morgan Chase, Microsoft, Nike, Verizon, and Disney. Okay, so I own 9 or 10 of those stocks individually. Now I go through this list and look, and I probably have all of these companies in an ETF or a mutual fund. Because I'm every single one of these companies I'm seeing on here, I know I own somewhere. Because I have a lot of mutual funds and ETFs. So, a good rule of thumb, the Dow Jones stocks, they're considered blue chip stocks. You're pretty safe pretty much buying any of these. But Walgreens Boot Alliance is, not going to probably produce the best returns on this list. Okay, so you look through the retails, you got Walmart, you got Walgreens Boot Alliance, You have Home Depot. So you have 3 retail, raw retail stocks in here. If I got to take my pick of those 3, I'm probably going to go with Walmart, okay? Probably going to go with Walmart because they're the most natural competitor to Amazon, and they all do different things. The Home Depot would be a really good buy, like I said, for your construction and stuff like that, but I would rather own Walmart than the Walgreens Boot Alliance, okay? Now, the next thing, real quick, guys, is the Lyft, Uber, and Robinhood IPO. I talked with my brokers on Friday, and we touched base again. So nobody knows when those IPOs are going to be coming. I think it's pretty safe to say we will see all 3 of those IPOs in 2019 because none of these companies have filed any of their initial paperwork to get started with that. So I look for Lyft, Uber, and Robinhood to be coming soon. But as soon as I get word about any of these companies, I'm going to be all over it. I hope I'm the first one here on YouTube to know about these IPOs, and we'll start digging in and doing a deeper analytical dive into those stocks as we approach the IPO dates, okay? Then I had a subscriber ask me how to set a stop limit order on Robinhood, and I'm going to go through that real quick. So I have GE stock pulled up right here, and you can buy GE here, and you can sell it right here. Of course, I'm using the website, but the app is going to be pretty much the same functions as the website. And this is how you do it right here. These 3 little dots next to the sell, okay, right here. You see red, white, red, white, red, white. Okay, so grab those 3 little dots, and right there you can set your stop loss order, and you can set your stop limit order on a buy or a sell, okay? And that's pretty much how it's done. So if you wanted to set a stop limit order, just punch in your stop price. It's got your limit price listed. You punch in your shares, punch in your expiration, review order, and submit. And it's the same exact thing if you want to do a stop loss order. Put in your stop price, put in the amount of shares, your expiration, review order, submit. So that's pretty simple. Just make sure whenever you put in an order, if you do want to set a stop limit, however you want to do it, just make sure to hit those 3 little dots and go through your review your order. Now the last thing I want to talk about in the homework is the updated holdings on the ETF MJ, because MJ is a very, very popular ETF that we track on this channel, and it's my favorite play for the medical and legal marijuana industry. And so this is the updated holdings right here. So this is my personal broker. This is TD Ameritrade, and they just updated this on 9/29/2018. So this is pretty up to date. However, let's look at some of the companies, okay, and where they're holding them. And then I'm going to tell you the ones I'm most interested in for stocks. So we got 10.7% 2 here in Canopy Growth. We got almost 9% in Cron. We got 8.32% in Aurora Cannabis, 5.91% GW Pharmaceuticals, 4.97% in CanTrust Holdings, and then right here, Emerald Health Therapeutics. They're actually holding a negative position, negative 17%. And that's 4% of their holding. Now, I'm not saying go out and buy Emerald Health Therapeutics. It's definitely on my watch list. As soon as I seen this, I put it on my watch list, and I'm going to be tracking that company, and I'm probably going to be accumulating shares over the course of time. They're very cheap. Let me look here. Very cheap. I think they're $3 a share. So if you have a Robinhood account, you could easily get into this stock and not be, yeah, $3.55 a share. So very affordable, and definitely going to be keeping an eye on that position. And then the Green Organic Dutchman Holdings, 3.88%. I'm not very familiar with them. The Origami Graham Holdings, they have about a 3.8%. Not very familiar with them, but then they have 3.71% in Hexo and 3.21% in Tilray. Okay? So that wraps up all my homework. Thanks for watching, guys. Make sure to hit the like button. Subscribe if you haven't done so already. Thanks for all the homework. I think I'm all caught up and ready for some more.